If you found this video, then count yourself very lucky because I will be revealing the top 5 rarest high win rates price action patterns that I have discovered over my 10 years of trading. Now I advise you to instant place a trade whenever these patterns form, but the catch is you have to watch this video to the very end so you will know where and when these patterns are effective. So without further ado, let's jump straight into the video. Welcome to TradeVox. The fifth rare price action strategy on my list is the ascending and the descending triangle. Now, for the ascending triangle, it forms when price attempts to make a higher high and a lower low in a bullish uptrend. As you can see, we are currently in a bullish uptrend where price continuously make higher highs and lower lows. This is where the triangle is formed. Always look for ascending triangles in bullish uptrend because that is where they are meant to be specifically. The ascending triangle is bound by two trend lines, a top horizontal line and an upward slope trend line connecting both trend lines together. Now, how do we trade this pattern? First of all, we need to make sure they are over 4 touches in total within the triangle. This is touch 1, touch 2, touch 3 and touch 4. Once they are 4 touches, then we can say that this ascending triangle is valid. The more the touches can also signify a greater chance of success. Now, once we have received our 4th touch, we need to wait for a clear breakout to the upside. And right there, we had a breakout to the upside. We take our long position. Our stop loss should be slightly below the slope. And for our target, we are going to be targeting the depth of the triangle. As we are measuring from here to the depth of the triangle. Now let's see how the price played out. There you go guys, our TP was touched. This pattern are quite rare and are very reliable, but compared to other price action on my list, they've made it out to the 5th in the chart. The same goes for the bearish trend. It forms when price attempts to make lower lows and lower highs in a bearish trend. The market has to be in a bearish trend before it can be classified as a descending triangle. Also, it must have 4 or more touches within the triangle to make it a valid triangle. All we have to do is wait for a breakout from the horizontal trend line. Then we place our trade targeting the depth of the triangle. So we measure out the depth of the triangle and wait for a breakout from the horizontal trend line before we take our sell trade. And let's see how the price goes. There you go, TP touched. Trading the ascending and descending triangle is very effective, and I'm very certain that this is a very good strategy that gives you a 75% win rate all the time. It always touch the target about 75% of the time. And hopefully you guys can test it out. Often look out for triangles, ascending and descending triangles in the chart. Though they might not form to the naked eye, you have to study the chart well before you can see these triangles. Often you see flag patterns, but because flag patterns are more pronounced, they are more visible than the ascending and descending triangle. Now let's head over to the next rare price action on this list. The next rare price action on my list is the Quasimodo pattern. And often you might have heard a lot about Quasimodo pattern. I even have a full course on Quasimodo. So after this video, you can also click on your screen right now to watch it, or the link in the description below so you understand what the Quasimodo entails. This pattern made it to the list because it is quite rare. People don't actually see the Quasimodo well, or they don't know the Quasimodo well enough. Well, the Quasimodo is simply when price makes a higher high and lower lows. Price has to make a higher high which just happened, and here we have our higher high and a lower low. Right at the left hand corner, this is our entry point for the Quasimodo. So we have to wait for price to retrace to this zone before we take our trade, targeting the previous high. Once we see this pattern, we can set our limit orders sitting right here. Stop loss should be slightly below the lowest low, and our take profit will be the previous high. Let's see how the market played out. Here you can see we got tapped into this zone for a bearish Quasimodo pattern. Price makes high, a low, higher high, then a lower low. So we wait for price to retrace here and we target the previous low right here. This is an example of a bearish Quasimodo pattern. Now for a bullish Quasimodo pattern, price makes a low, lower high, lower low, higher high, then we wait for a retracement to here before targeting the previous high. That is an example of a bullish Quasimodo pattern. All this I explain more in the course linked in the description below. So let's quickly see how the price played out within this Quasimodo pattern. There you go guys, TP touched. Make sure you try out the Quasimodo pattern, learn it for yourselves, and also be able to be profitable using this rare, highly effective price action strategy. Let's head over to the next rare price action strategy on my list. Next rare price action on my list is the diamond pattern. And as the name entails, it is always like a diamond shape. This is because it consists of four-sided price action. Now, these diamond patterns often act as both a continuation and reversal pattern. If the pattern occurs in the midst of a trend, then it is considered a continuation pattern, while if it forms at the top or bottom of a trend, then it will be a reversal pattern. Right here on the chart, we can see we were in a downtrend. Price makes lower highs and lower lows before we had a diamond pattern forming. Once a diamond pattern forms at the bottom, we know that it is acting as a reversal pattern. How do we trade this scenario of a diamond as a reversal pattern? We have to wait for a clear breakout of the diamond. After a clear breakout, we take our buy positions. Stop loss should be at the low of the diamond. And our take profits, we are going to be targeting the previous zone. Whenever it is a reversal pattern, we have to locate the previous high as our take profit zone. So here we have our take profit. And let's see how the price plays out. There you have, we have our TP touched. Now, what if it's a scenario of the continuation pattern? So let's go to the scenario of a diamond pattern forming as a continuation bias. Right here, we can see that we are currently in an uptrend and we had a diamond pattern forming. This is basically when the price is formed in a way that it is shaped like a diamond. And we have to wait for a breakout to occur from the previous zone of the diamond before we take our trade. Our target is going to be the previous swing before the formation of the diamond. So we draw our tool. This is the previous swing length, and I am going to stretch it out to see where we are going to be taking our take profit. So place our buy limits, take profits. Let's see how the price played out. As you can see, we were smashed. One thing I have noticed is that diamond patterns are more reliable as reversal patterns, and they often form more as reversal patterns, and also the diamond tops form more than the diamond bottoms. Now, for the diamond pattern forming at the top of an uptrend indicates that it is acting as a reversal pattern. So let's quickly draw out the diamond pattern here at this uptrend. We have the first trend line, and now we have the second trend line drawing right here. Here we have the third trend line connecting. And lastly, we have the fourth trend line, turning this pattern into a diamond shape pattern. All we have to do is wait for a break to the downside so we can see that we have confirmed to enter the trade. And here we have a clear break. Our TP should be the previous low, which is right here. Since this acts as a reversal pattern, we are going to be using the previous low as our take profit, enter our sell trade, stop loss slightly below, and our take profit right there. Once all those conditions are met, we need to just wait for the market to do its magic. The next price action on my list is the Megaphone pattern, and it has its name because of the distinctive figure of how it looks like a megaphone. And this comprises of two trend lines, upward slope and downward slope. As you can see, we had this price connecting, and we had this price connecting. So this is how the Megaphone pattern looks like on your chart when you discover it at first. Now, one major thing you need to know about the Megaphone pattern is that it has 5 swings within its wing. Here we can see we have our swing 1 and our swing 2, our swing 3, our swing 4, then our swing 5. The swing 5 is always where we are going to be trading. In an uptrend, once a Megaphone pattern occurs in an uptrend, that means we are going to be selling in our swing 5. Why? In a downtrend, if a Megaphone pattern appears in a downtrend, we are going to be buying our swing 5. Let me just quickly draw an example of how a Megaphone pattern will look like in a downtrend. This is how a Megaphone pattern will look like in a downtrend, whereby the slopes are going to be more downward, and we are going to be buying our 5th swing. For this downtrend, we can see here is our 5th swing. So if we were in a downtrend, we are going to be taking our buy trades from here and targeting the end of the trend line right here. Our stop loss is going to be slightly below. That is how we are going to be trading the Megaphone pattern in a downtrend. Now let's look at the price we are currently at. We can see that this is forming in an uptrend. So we are going to be selling this Megaphone pattern. After we have counted, we have to wait for An opposite candle, we are in an uptrend, so a blue candle or a green candle will signify that we are still pushing higher. But once an opposite candle forms, then we know that we have been triggered to the seller's zone. So we take our sell trade right at the close of the opposite candle, and our take profit is going to be at the slope, stop loss slightly above the high of the candle. And let's see how the market plays. There you can see we took our profits easily. These price action are not infallible, but they have a very, very high percent win rate and success in trading when you spot them. So I advise you, whenever you see this pattern forming, always get ready because you have a trading opportunity at the verge of your hands. So make sure you take that trade at the fourth swing and see the magic the chart has to make. Now, the last rare price action on my list is the pipe patterns. Now, these pipe patterns are very rare and practically one of the best price actions to trade. They often form mostly during the daily and weekly times. These patterns form at the market tops and bottom due to price exhaustion. Usually, the first spike in price is followed by another spike, which is at least similar to the length in the opposite direction. Don't get confused, because a bullish or bearish engulfing pattern doesn't look like a spike candle. Have a quick view of how an engulfing candle looks like. The opposite candle must pass the candle by at least 50% before it is classified as an engulfing candle. While during the pipe patterns, both candlesticks often have the same length or just a few difference in length, as you can see right here, before we can classify it as a pipe pattern. As the name implies, pipe patterns, they look like two parallel lines which form at the market extreme. Now, how do we trade these pipe patterns? They offer very low risks and high reward. Once we see our second spike in the chart, we have to wait for price to trade below the lowest point, which is here right now. This is the lowest point of the chart, so we need to wait for price to trade below it before we can think of entering the market. Now, once that has happened, we can enter our sell position, or if you are an aggressive trader, you would have just put a sell limit at the lowest point of the pipe, targeting the length of the pipe in total. So from the highest point to the lowest point, measure it out, take our sell position, the low, and we are going to be targeting the length of the pipe as our target 1. We can continue this motif till we reach a major zone, like right here. We have a major zone right here. It is always advisable to always be satisfied with the first take profit when trading a pipe pattern. So now we have our pattern set. Our stop loss should be 50% of the pipe. And let's see how the markets played out. There you go, we had our take profits touch. This price action of rare and reliable. I am saying it again. So whenever you come across pipe patterns, don't confuse yourself thinking they are engulfing patterns. Know the difference between engulfing and pipe patterns because they are pretty obvious when you sight them in the market. Well, that's all for today's video, guys. I really thank you guys for making this channel reach 1K subscribers, and I hopefully will put out more content that will benefit TradeFox family within next year. So this year has already ended, and I promise you guys great strategies and great content as a trading educator and mentor to you guys. So with that said, see you in the next video. Peace.